Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And I am just on the cusp of taking off on a quick trip down to Fresno. Want to look at a couple of properties, want to sit with the team at the hub and really just check out what's going on with our unit. So you are not going to see the traditional videos from Jonathan Twomley, the Three Amigos, things of that nature. This will be the only additional video other than the daily financial news, right? We did the daily financial news early. This will be the last video. I'll probably post this at 9 a.m. Pacific. And then that will be all she wrote for the day, as I am going to jump in the car and get on the road. But what I wanted to do in this quick video is talk about what the Fed is doing, Fed expectations. I think we are all going to hear more and more I don't know, let's be frank, billionaires and CEOs talk about the economy slowing down, talking about the Fed breaking the economy. I wanted to pull up an article and really highlight that this is probably what the Fed wants to hear, frankly. I think the Fed in their inflation fight wants to hear from the top 1%, the top 10%. I think, as I've said, the Jackson Hole meeting, the Fed walked up to the 1% and kicked them in the nuts. They're supposed to be feeling pain, right? The top 1% owns almost everything. Asset owners are going to get hurt. The Fed is going to hurt asset owners. And the question is, when do they pause? When do they cut? All of that is up for debate, no doubt. I don't see a Fed pivot this year. Many are calling for, Cathie Wood, Elon Musk, and others. But again, it's important to see the 1% get on TV and kind of show stress. And I think there's a lot more pain coming. I think the 1% is going to feel it the most because, again, the other 90% has been feeling it the most. So, I think your profits are going to go down. I think you're going to have to pay employees more, right? We just saw the railroad strike. I forget what it was, 24% over 5 years, I think, plus an $11,000 check once ratified. The 1% is going to have to pay up. Now, it will be inflationary, as always, as things ripple through the system. But the land of easy money is kind of over. So let me bring up this article so we can go through it quickly, and then I will get on the road. So this was done by, this article references investor Barry. I'm not even going to guess how to say that. Sternlich. Oh, I guess I did guess. Sternlich. He's a billionaire. He's basically saying the economy is breaking hard and that CEO confidence is miserable. Again, think about the playbook going on today. The Fed is raising rates, causing CEOs to reevaluate cost of capital and borrowing. Job market is extremely strong. You have to pay more to get employees. All kind of supply chain issues and things of that nature. So again, it is not shocking that the CEOs are miserable. They're working harder today than they probably had to work in quite a while. And so that's interesting. The economy breaking hard, this is a very interesting kind of discussion, right? Because a lot of the numbers we are seeing are frankly backward looking. They are lagging indicators. You're going to hear that a bunch, leading versus lagging indicators. But again, I think the playbook is pretty simple, right? Inflation is a problem. Core inflation, thankfully, this week has become more interesting, more important, as I was hoping. But let's get into this article a little more. Again, we have another person, much like Elon Musk and Cathie Wood, saying the Fed needs to pump brakes. The economy is in trouble. They are risking a serious recession. I would argue that the Fed still sees the possibility of a soft landing. Again, and as we know, the Fed is going to be raising rates next week. So if we get into the article, again, the economy is teetering on a brink of a serious downturn. He's asking for the Feds to pause on rates. Consumer prices, again, this is just kind of a review of what's going on with inflation. Most importantly, again, if you watched earlier on the week, I think it was Tuesday, you have to watch core. Core is where wages, rent, services. It's not about stuff. I think we have a lot of services inflation coming. Barry thinks that the Fed is being too aggressive. This is a really interesting conversation because I would argue the Fed is late which allowed CEOs and billionaires like Barry to stay at the buffet longer. It was really easy on you, Barry, last year when when rates should have been up. And now the Fed's just trying to catch up. And if you are caught off sides, then that's what happens, right? You got caught. Maybe you had variable rate debt. Maybe your bond, your bonds you're trying to raise or your stock you're trying to sell didn't help. But I think this is what I think the Fed's coming for the 1% in the top 10% who are asset owners. Again, there's going to be a lot of fear. People talking about a serious recession. If you watch my channel, I agree a recession is coming. I'm not really sure what a serious recession is defined as, right? A recession is clear. What is a regular versus serious? I'm not sure. Consumer confidence is terrible. I don't know that that's true. I think we've seen consumer confidence and consumer expectations actually improve. I think a lot of that is related to gas prices, which again, I've shared with you, I think are manipulated. I think the winter could be rough. Consumers are certainly in a interesting spot. But yeah, it's interesting. Inventories are backing up at warehouses. Again, I think this is about stuff. Walmart, Target told us they had too much stuff. We have to realize that according to core inflation, a lot of the sticky inflation is not in stuff. It's not in TVs or computers. It's in services. Hence, in wages are a big part of services. They're talking about CPI being old data. Call the CEO of Walmart. Again, we've heard from them. Things are slowing down. They have to cut prices to move inventory. They over-ordered. Some of this is just companies over-ordered. If you were on my channel 6 or 9 months ago, we talked about purchasing managers double and triple ordering. I mean, what do you think happens when you double or triple order and it all shows up? One of the things that was really interesting, we did a review of 1970s Milton Friedman. And Milton Friedman talks about, companies like Walmart or Target. He never says those names, but he just says company X. They don't realize that the entire economy is doing well. Walmart sees sales going up. They don't realize it's because of stimulus ballers. So they think they figured something out. So they increase their orders, not realizing what Walmart is experiencing is the same thing that Target and Kohl's and Best Buy and all these other people are experiencing, because money has been printed and in this case mailed directly to consumers. And consumers do what consumers do, and they go shopping and they buy early. They pull forward demand. So frankly said, the consumers bought enough stuff. Now we are seeing inflation in other parts of the market. It's called services, not stuff. Again, this is Milton Friedman talked about this in the 70s, and we are kind of repeating that 50 years later. Mortgages, again, you know what I think about mortgages. Mortgages, I think, are going up. I think we hit a cycle high today. They will go higher. I think that's going to cause a crash, much like the 81 market, where the housing market transactions are down 50%. It will not be pretty. I think the Fed's going to get rates to the terminal rate of 4.5 sometime early next year, and then just hold them there. I do not see a rate cut next year, unfortunately. We'll see 2024, but I think this is, I think most conversations are about 2023. Again, people are one of the things we're going to see as unaffordability gets worse is more demand for rentals. It's an interesting kind of economy today. So again, what we need is wage growth, frankly. You've got to pay higher rents. You're going to have wage growth, was highlighted here. And again, we saw some of that with the railroads today and some other things. So what is Barry saying? Basically in Q4, which is right around the corner, Q4 starts in about 15 days. It'll start October 1st. So we shall see. I think what's going on right now, folks, is you're going to have a lot of people paraded across, the TV, Elon Musk included, right? He's the richest man on the planet. The Fed walked up to them the other day and kicked them. And the 1% is feeling pain. Their stock portfolios are down. They're likely CEOs. They're having to pay more wages to their employees. They're having a much more difficult time maintaining margins. They have currency impact, right? We've heard about FX. Microsoft was the first to talk about it. There's a lot more of that coming. So I think the economy is in for some pain. I think the Fed, frankly, will be comfortable with 5% unemployment. For most of my adult life, 6% was seen as full employment. I think the Fed will not blink if unemployment goes to 5%. I think CEOs are supposed to feel pain. I think that's the Fed's intention without saying it. So it's going to be very interesting. I think there's plenty of pain going forward. We got to watch the consumer. We got to watch unemployment. The real estate market is clearly in a depression. Transactions are going to crash, especially as rates get to 7. It's just really interesting. So I want to tell you to have an amazing day. It is September 15th. This is your last original video from my channel. You usually get 4 or 5 or 6. This is it. I'll post this at 9 a.m. And just enjoy your day. I hope you have fun. We're going to go see some opportunities in Fresno, see if there's any deals I need to write up, see if anybody wants to do seller financing. So going to be pretty cool. I do want to remind you that we're doing our next Saturday deep dive this Saturday at 9 a.m. If you're not a student yet, you should buy the course. I'll send you the invite. You can talk with Bob Langworthy, a real estate investor. He just bought a fourplex here this week. And you can ask him about seller financing, depreciation recapture, real estate professional, whatever interests you. As a student of mine, you will be able to ask him questions directly. And if you're just a follower on my channel, no worries. We will post that video Sunday morning at 9 a.m. For all of you to consume. So I hope you have an amazing day. I know Olivia and I will. Take care of yourself. Have fun. Bye.